Okay, so hello everyone. Welcome to the show. With me today is a property entrepreneur who's been in the who's been investing in property for over 25 years. He's built a portfolio of over £1.5 million, consisting of buy-to-let, HMOs, projects with planning uplifts, and also does quite a few flips, particularly relating to distressed assets. He's also a very seasoned developer, which is why I have him on the show, particularly to speak about crowdfunding. In his previous life, he was an investment banker, and at the age of 50, he turned his physique around, shredding 50 kilos and actually gaining a six-pack. As part of his property investing journey, he's raised all types of finance, from debt to equity, from high net worth individuals, from private investors, bridge and development finance, along with traditional debt. He recently crowdfunded over £1.5 million of senior debt finance through a crowdfunding platform for his development in Lichfield. He has other developments going on at the moment as well, which we'll speak about hopefully. But I want to ask him a few things about crowdfunding, as keeping in with the theme on crowdfunding that I'm going through the show at the moment. So I wanted to get Diksesh Patel on to discuss his project and also generally his crowdfunding experience. So welcome, Diksesh.
Thanks, Tariq, for having me. Thanks for the introduction. Yes, great to be here.
Cool, thank you. So let's dive straight in, if you don't mind, Diksesh.
Sure.
Tell me, what made you consider going down the crowdfunding route? Because you're quite experienced. You've dealt with all kinds of debt and equity finance. On this particular project in Lichfield, what made you decide to go down the crowdfunding route instead of more traditional bridge and development finance?
Yeah, no, it's a good question. A number of reasons. Number one, crowdfunding platforms are very good for developers to raise their profile with multiple investors. So you don't know who's watching in the audience, and people will genuinely sort of invest in small proportions, and there will be an element of possible reinvestiture once this project finishes. So that's one thing. Second thing is, with crowdfunding platforms, we have to sort of differentiate the different ones, but with the one that we're working with is a senior debt lender. It's a peer-to-peer type platform with funding coming through institutional sources as well. And I would say much more easier to deal with than a traditional bank. For example, working with the bank's monitoring surveyor and drawdowns, we're not having to wait for those drawdowns for lengthy periods, because obviously that can impact your cash flow as well, which is hugely important for a developer. So that's really good. The other thing is also, no matter what happens in the world of development, there will always be a variation of costs, especially when there's things you can't see under the ground, unforeseen issues. And certainly working with this crowdfunding lender has been refreshing compared to working with your traditional lenders and banks who provide development bridging.
Yeah, so that's quite interesting, and I think certainly this mini series that I'm running on crowdfunding is on the back of a blog article I wrote a few months ago about the experiences that I've had as a property lawyer dealing with bank lending lawyers on development finance and bridge for SME property developer clients. And it's been, it's not been easy. Certainly, I think since 2008, 2009, the appetite for lending to development projects has reduced amongst banks. So it's certainly reflective in the process. Now, about this crowdfunding platform itself, you went with senior debt, it's through Crowd Property. Walk me through the process that you went through in terms of choosing the platform to work with. What was the criteria that you considered before? Because there's a few senior debt platforms, crowdfunding platforms out there. What made you choose Crowd Property in particular?
So first thing, we're looking at track record. How many developers and how many projects have they funded? How many have been successful? And certainly With this one, a lot of success. That's the first angle to look at. The second thing is to get conversing with developers who've already worked with the platform and find out their experiences. And, you know, we heard a lot of good things as well. Yeah, especially, I mean, I alluded to earlier, dealing with the bank's monitoring surveyors and drawdowns, where cash flow is hugely important. And for me, that part was hugely important. And the third important part is to ask the developer's experience of how you've dealt with the crowdfunding platforms when you had issues with the project, whether it's a variation of costs, and how it has been dealing with the bank in that respect. So those were the sort of the criteria. And the final criteria for us as well also is to get exposure to a platform that has a wide investor base. And that, you know,
right.
So tick pretty much all of the boxes.
Yeah, and I think, you know, this particular crowdfunding platforms, you know, there are quite a few out there, but this particular one, Crowd Property, you know, has been established for quite a number of years. They've won multiple awards. A lot of the projects have been funded relatively quickly, and I think even yours, if memory serves, was funded in under an hour. I think it's about, what, 47 minutes, is it, if I remember correctly?
No, it was under 60 seconds. I think it was something like 47 seconds.
Under 60 seconds, right? Sorry, yeah. So it was pretty quick. So, and I think that's testament to their reach and also the existing investor base that they already have, that they're able to fund a project like that so quickly. Because, you know, I know it was in 2 phases, but in total you raised 1.5 million. So it's a fairly big pot. But it was funded, you know, very, very quickly. And it's interesting hearing from you that, you know, the experiences of other borrowers through the platform, developers through the platform, was important for you. And I think that's something that is you know, not frequently looked at. And I think it's a very, very valid point. I'm dealing with a crowd property funded project at the moment for a client. And I got to say, the experience has been a breath of fresh air. It's been very easy going on the legal so far, touch wood. So you know, it's certainly a welcomed change in my experience from more traditional kind of lending and banks. But I'm interested to dig in a little bit on that, Diksesh. You know, if you don't mind, talk me through, you know, like from the initial inquiry that you made, probably not through their website, because you know directly, you know Mike Bristow, who's one of the co-founders of Crowd Property directly, as do I. So walk me through, you know, the kind of step by step. What was the, you know, the process like from the initial inquiry right through to the money being in the bank account, and then you've also touched upon what has been like since then as well.
Yeah, sure. So I think stage one's pretty easy. I mean, they just want site details, all your drawings, or your plans, and also the type of build you're going to do, and key information around the site details itself, and what they do on that stage one. Once they've got the information with their internal underwriting process and risk management process, you get an initial draft set of terms, agreement in principle, and once you have that, then it's a conversation to drive it forward. And from that point onwards, we decided we wanted to work with them anyway, having already done a bit of background research with other developers who've worked with the platform. And it's, you know, it's the same as a traditional lender. Instruct your solicitor, instruct a valuer, which is appointed through one of Crowd Property's panels, and then off you go. Once the valuation comes in, then the terms of the loan are pretty much pinned down in legal form, and then the legal process kicks in from there.
And did you find both the underwriting process and the legal process fairly straightforward? You know, was it much more straightforward from, you know, more traditional bank finance, you know, that process in terms of credit underwriting and legal?
Well, it's interesting because, I mean, Crowd Property themselves have experience as developers themselves. So that absolutely helps as well, because they understand the developers' pain points and issues that we may not have seen or we should be looking out for. So they're always providing, points of guidance in case we needed to look at something. For example, dealing with Network Rail, for example. So they've been useful in that respect. In terms of the legal process, listen. No legal process is smooth, regardless of what anybody says. But what I do know was it was a lot more straightforward than dealing with a traditional lender.
Right, and I think that's an interesting point there, because one of the things I think that came out of this, which was interesting, is that the crowdfunding platform, in this case Crowd Property, had their own in-house expertise in terms of surveyors and who are experienced in developments and development appraisal, and so the underwriting was done pretty much in-house. I know some crowdfunding platforms, even though they're property centric, they don't do the underwriting in-house because they haven't got the expertise. They might be too early stage or what have you, and this made it, from your perspective as a developer borrower, a lot easier to do because everything was done in-house. Obviously, valuation has to go outside, because no lender wants to carry out that function in-house. They want to have separation and valuation done by an independent third party. But certainly, credit underwriting, it's important for it to be done in-house. And so, since it's been funded and the project's underway, you kind of touched on this, but how's the relationship been so far with the platform?
Yeah, no, it's been very good. We've had a few variations of cost, and they've been ultra helpful. In terms of how to work with the contractor, how to deal with it, anything that we might need to look at specifically. And so, the process working with the monitoring surveyor has been very good. He's been very helpful, directing us as well on site. And it's been I would say a breath of fresh air, if I may say.
Yeah, great, fantastic. And so Diksesh, I think you might already know this. I'm a big believer in the black box thinking written by Matthew Syed. I'm all for learning from errors and mistakes and failures in some cases,
Sure.
and trying to improve, because a lot of times that's the quickest form of learning and improvements. And so with that mindset, and I know which we'll discuss a little bit in more detail a little bit later. I know you're involved in mentoring budding property developers and property investors, and you also run a property mastermind group. You've also hosted various property meets yourself, so you meet a lot of people who are at various stages in their property journey, from the newbie who the beginner who wants to get into property, to people who are much more experienced. And I know from that you've heard of some horror stories, let's put it that way, on other projects and other platforms. I don't want to dig into the details of that. That's not the purpose, but really, from what you've heard and overall your experience with crowdfunding, what do you think are some of the lessons to be had, that could help people, the audience, improve both in terms of a borrower, but also as a investor lender?
Yeah, so I think it's a great question, and where does one begin? I think we have to sort of understand the different types of crowdfunding platforms involved or out there. So the audience needs to be aware that you have senior debt type platforms like Crowd Property. You also have mezzanine finance type lenders that also sit between senior debt, stretch senior, and mezz. And then you've obviously got some of the equity funding platforms. So depending on which one, you have different sort of lessons learned, I think. If you're an investor, certainly the lesson learned is one thing is invest small amounts across multiple projects, across multiple platforms. So you're getting a number of things in there. You're getting an understanding of how the crowdfunding platform works. How do they report back to you as an investor? How frequent is that information coming back to you? What format does that information come back to you? What about the numbers, the ongoing project management, and who's keeping a track of the developer and the construction company that might be involved with the project? So that's definitely so people should look at that. The other side is don't be afraid as an investor to take your own legal counsel, and that's it's much cheaper to do that up front because no two crowdfunding platforms are the same, and they all have different frameworks in place. So just have to be aware of that. Now, if you are the other side and you're a borrower, what you're looking for is a track record of existing borrowers who've actually been through full cycles of projects, so get to speak to them, find out their experiences dealing with the crowdfunding platform right from the beginning all the way through closure, and how efficient they are in terms of drawdown facilities and dealing with the bank's monitoring surveyor. And again, if you're depending on which stack of funding you're looking at, whether it's debt, mezzanine finance or equity, again, ensure you have your own legal counsel as a developer as well, because the agreements, whether it's shareholders agreements, joint venture agreements, also JCT contracts with contractors, and company structures are all hugely important. Let the professionals provide you with the right legal counsel.
Yeah, absolutely. I think that's it's a fantastic advice. Now, Diksesh, would you recommend crowdfunding as a developer borrower as the primary source of funding, or do you still think that bank finance or the more traditional sort of debt? I'm not talking about equity and that sort of play, but in terms of just debt, would you now say that crowdfunded senior debt and maybe even mezz is best to go down the crowdfunding road as a primary option, or would you still look at more traditional first?
So I guess it depends on where you are in your developer's journey. If you're sort of an early stage developer and you met possibly you're in your second or third scheme, certainly working with senior lenders on the crowdfunding side definitely is much more what I would say is fluid and much easier than dealing with a traditional lender all day long. I mean, the headline rates might appear you're not talking huge amounts, slightly higher, but what I find with traditional lenders is there are a lot of hidden costs that only seem to be drip fed through the legal process. Whereas I found certainly on the senior debt side with crowd property, and again, there'll be the odd little things that pop up from time to time, have been sort of pretty transparent, I would say. And certainly for an early stage developer looking to build their profile as well, certainly get a crowdfunding platform that has a big investor base that can certainly be part of your what I would call is your brand awareness, profile raising, and you can't put a price on that. On the flip side of it, if you're moving towards where I'm moving towards, which is we've created a good track record of the types of sites that we're doing in London, and so when big funding groups get to see that, what they want to know is whether it's repeatable as a process. And therefore, you potentially have one stack of funding all the way from debt all the way through to equity. And that, for a developer, if they have aspirations to scale their business, what you want to do is focus on doing simple, boring, repeatable projects that you can actually just consistently spit out, because funding groups love that.
Yeah, absolutely. And I have come to learn that there are a number of both institutional investors and family offices that will frequently fund via a crowdfunding platform. So it's a great way to increase your profile so that, some of them will then, because, they're also looking for borrowers and developers to invest in, and the crowdfunding platform is a great way for them to very quickly access those who are active in the market, rather than go and sort of find them individually. So that's great advice. Diksesh, just as a sort of a roundup to a certain extent, is there anything else that you want to maybe mention about crowdfunding and property development generally?
I'd say, property development, there's no straight line to success. Everybody always sort of looks at property development as the holy grail. It is challenging. There's no developer that I don't know during these tough, challenging economic times that hasn't had challenges with projects. Just, manage your risk. And I always talk about de-risk all the way through as developer, and cut your teeth into simple, repeatable projects. I cannot overemphasize that. I see time and time again, developers have got a fantastic model on the types of niche projects that they work on, and all of a sudden they start veering away to sort of big, crazy land deals before they sort of systemized and productized what they currently have. And that's definitely
absolutely. Absolutely, that's great advice. Thank you for that, Diksesh. Just finally, we touched on this earlier. I know you run a property mentoring and mastermind program. Can you share with the audience some case studies or examples of how individuals who you have mentored or attended your mastermind have progressed through their property journey?
Sure, I think, yeah. So with me, I tend to focus on the initial early stages of, one is their mindset, because in what we do, it's 99% mindset, 1% knowledge, and 100% activity. That's huge. And I'll give you, for example, when we're raising funding, the real skill there is the art of relationship building, the know, like, trust mechanism. Go through a courting period, because when you bring investors on, they are like business partners. So you have to make sure that you like each other, your values are aligned, and take your time going through that courting, engagement and marriage process, because if that process happens too quickly, we all know too well that can end up in ugly divorce. And then secondly, what we do is we look at building the property entrepreneur's strategy. So from my perspective, it's all well and good you learning about HMO's property development SA, unless you have a fundamental strategy, a business strategy that underpins your property journey. You'll find it very difficult to put the activity plan together that will take you to your goals. And then the last part, which is the most important part, is the accountability of the activity, and I find that property entrepreneurs, they get accountability from two forms. Obviously, they've got me as their mentor behind them, but the actual mastermind group as well, with like-minded individuals driving each other forward. Because in this business, there are no new mistakes, and sharing in a mastermind type community is caring, and you learn off each other, including me.
Yeah, absolutely. And I think certainly if you look at many role model individuals who have achieved success, or high performers, even including in sports, they will always have some form of mentoring or coaching, depending on which field you're in. Some sectors is called mentoring, some sectors called coaching. But you need somebody as a role model to emulate, to help motivate you sometimes, to also point you in the right direction, so that you're not wandering aimlessly. And I think your analogy earlier about there's no straight line to success in development is very true. I think in business generally, and I dare say in life, it's always a roundabout way. And sometimes if you have somebody who's a few steps ahead of you, kind of guiding you along the way, you might not get distracted and get lost as frequently as you could if you were to left to your own devices. So Diksesh, it's been great having you on. Thank you very much for coming on. I'll link through to your website and also your mastermind and mentoring program in the show notes below. So thank you very much.
Thanks for having me, Tariq. Good to see you.